Welcome back to our weekly update. I'm Charlotte McLeod with the Investing News Network, and I'm here to give you a quick look at our top stories for the week. The gold price has continued to experience volatility after last week's spike to around the $19.70 per ounce level. The yellow metal was in the $19.10 range on Monday before rising to nearly $19.50 on Tuesday. It's since pulled back and was just over $19.35 at the time this video was recorded on Thursday afternoon. The Russia-Ukraine situation of course remains key for gold, but with events progressing rapidly, it's tough to get a sense of what's coming next. This week has brought intensified conflict between the two countries, as well as an increasing number of sanctions on Russia, including the exclusion of some banks from the SWIFT system. I asked Will Rhind of GraniteShares if these fairly large ups and downs in the gold price are likely to continue, and he emphasized that the crisis in Europe has brought gold's safe haven status to the forefront. While inflationary pressures have been providing support for the precious metal, current events have reignited gold's fear factor. Will also pointed out that gold isn't the only precious metal that's being impacted by Russia's attack on Ukraine. Russia's the largest producer of palladium, accounting for about 40% of global supply, and it's the second largest miner of platinum. These metals are used in catalytic converters, and Will said that concerns about supply chain disruptions are already being reflected in prices. Both palladium and platinum have seen increases in recent weeks, and Will said we could be looking at materially higher prices for the two metals moving forward. With Will's comments in mind, we asked our Twitter followers this week to look beyond gold and tell us which commodity they're watching most closely in light of what's happening with Russia and Ukraine. The poll was ongoing at the time of this recording, but most respondents chose uranium. We'll be asking another question on Twitter next week, so make sure to follow us and share your thoughts. Speaking of uranium, prices have been on the rise, even surpassing $50 per pound. However, David Talbot of Red Cloud told me that may have more to do with buying from the Sprott Physical Uranium Trust than with the invasion. In a Monday conversation, David said the Sprott Trust had reportedly raised about $100 million in the last several trading days, enough to buy more than 200 million pounds of uranium. It's approved to raise another $2 billion beyond that, and David thinks there's potential for the vehicle to take another chunk of physical uranium out of the market. That's not to say Russia-Ukraine events should be ignored. 8% of U.S. electricity is generated by uranium sourced from Russia, Kazakhstan, and Uzbekistan. And while David isn't expecting supply disruptions, he does think payments could become a problem due to the SWIFT restrictions on Russian banks. That's all for this week. If you like this video, make sure you subscribe to our channel and turn on notifications so you don't miss future updates and interviews. You can also follow us on social media or click below for our free report or any article mentioned in this video. See you next time.